Happy New Year, everybody. It's 2025, and you are here at Everything Phoenix YouTube Live. Guys, thank you for taking time out of your new year. This is the first full week back that is like the regular working week for pretty much everybody. And I'm happy you're spending your time with us here today. We will not waste your time. We will make this very entertaining as possible, but factual. The data is factual. You will hopefully enjoy it, and you'll get some good ideas as to where the market stands. Now, it's early in January in 2025. Today is the 6th of January, but the market is already starting to speak a little bit, the local market here. So we're going to jump in and talk about it here in a second. If you don't mind, just putting this in the comments here where you're watching from helps curate the algorithm of YouTube to kind of put us to the right audiences out there and curate our content the best way. You also can ask a comment or ask a question, make a comment, and let us know kind of what your thoughts are, what you think with what we're saying, or in general with the housing market altogether. Be happy to do that. If you're watching the replay, let us give us a comment, and we'll be sure to reply. But thank you as always for watching. Let's dive right in and talk about this market. Is there a sell-off? And if so, what does that mean? Is it temporary? Is it more longer term? And what's it doing to the affordability, or even on the flip side of that coin, the window of opportunity that potentially could exist for some people who maybe have been stricken by the affordability bug here recently. So I'm going to share my screen as I always do. And again, let you know kind of what we're seeing here in the marketplace in the Phoenix area, because it is, somewhat interesting. It always is, right? To an extent, it always is. So here we go, guys. First and foremost, we're going to let you know what's going on here, because you need to know the foundation, the backdrop, what's going on in the marketplace. And I'm telling you right now, guys, if you've been following the show, you know that the CMI is huge. It's the baseline of everything we do and everything that anyone, honestly, anyone should do if you're trying to gauge what the housing market is doing. It's not, I didn't come up with this. It's some people who are way smarter who follow this to a T and aggregate the data on a real-time basis throughout the day, every day here in the Phoenix area. Okay. And right now, 90.6, guys, if you've been following the show, you know that we've been in the 86th, 87th percentile, and that means we were in a buyer's market. Now, technically, we're at 90.6. That means, based on that banner right there, that we are in a balanced market between 90 and 110. We are at the border of a balanced market compared to a buyer's market, but it still is favoring the buyer right now. So that's where we stand. That gives you the backdrop of kind of where we are going with this. Now, if I go into this screen right here, you're going to see some cool stuff. All right. This is interesting. I think you should stick around for the next 10, 15 minutes. If I were you, that's just me. I'm a little biased, but thank you for doing that. Here we go. January 3rd, Crawford report. This is what they're saying and showing. Look at all the green. Now we're going to go dive deeper. We're going to go deeper into this one way or the other. And we're going to talk about what this means. But a lot of green on the screen is typically pretty good. Now, this is showing the marketplace is reacting favorably to what's going on across the different suburbs in the Phoenix area, guys. The green is good. That means the CMI, the Crawford Market Index, is increasing week over week from where it was. And guys, this shouldn't be a surprise to most people, because obviously the last 2 weeks of the year is going to be pretty slow, right? In any city, in any market, most of the time. And this was no different. So obviously the first week of January should be better than the week before. And in the situation across the board, it pretty much is. You can see right now, Chandler leads the way with a 14% change, but the CMI at 154, followed by Paradise Valley, Fountain Hills, Paradise Valley, Tempe, Scottsdale. Now, if you look at those top five, what do most of those have all in common? Now, Tempe, you could argue this is not necessarily the case, but the 4 out of the 5 here, Scottsdale, PV, Fountain Hills, and Chandler, a lot of them are East Valley. A lot of them are higher price points, and Tempe really falls in line with this too. And some of these even are very seasonal markets like Fountain Hills, PV, and Scottsdale. So seasonal markets, the money is doing really well. The higher end is doing actually fairly well compared to the common folk. And I'm going to say common folk because that's the words that the Crawford market uses index here in the daily observation here we're going to discuss in just a second. So let's keep scrolling down here and let's talk about there's some good stuff here, right? All right, here we go. So the average change in CMI of the past month is 8.8 to the good, while last week we saw a 6.2 to the good increase in the CMI across the board. That's pretty crazy. Now here we go. January 3rd, a massive number of listings expired at the end of the year, almost 900 in total. This reduced the number of active listings by about 550 and the number of temporarily off-market listings by about 250. This more than doubles the number of expiring listings we saw 12 months ago. The high number has dropped the listing success rate to below 65%. For comparison, the listing success rate last year was above 68%. Now, guys, this is huge. You're talking an additional 900 properties off the market gone as of December 31st. Now, January 1st is the day of the year that does have the most expired listings that were just available for sale the day before come off the market. And that's the same way every year, but this year it doubled it up. It's a lot more than typical, a lot more than last year, and last year wasn't a great year. So that means two things primarily. Number one, there's a lot of people who may be putting their house back on the market here in just a week or two because it expired from not selling with the previous agent. They could use a different agent or maybe stay with the same agent, but they're going to be putting their house back on the market. Most likely that will be a majority of those 900 homes. However, some will be gone off the market for a while and they'll wait and see what happens. But I wouldn't wait too long because the seasonal trend in Arizona, in Phoenix here, specifically, is one in which it is a great market from January to April. And then, of course, May and June are good too, even though it starts to heat up. But January through April, a phenomenal market to be a home seller in the Phoenix area. And guys, that's why if you're looking to buy right now, there's a window of opportunity because the market is kind of being pressed down right now, kind of flat. And if you're looking to purchase, man, you have some time right now where sellers still don't have a lot of the four-letter word that starts with an H, not an F, okay, with an H, and that's hope. See, when sellers get hope, then things change. Even though the market may not, even though the data may not. If sellers believe there is light at the end of that tunnel coming down because it is a good market typically between January and April, January and even June, then they'll hold off for their price, or maybe they will hold off for the terms they want. And so you as a buyer have a chance to come in and possibly do some good things for yourself when getting the house you want now. But again, that could change. We'll see. But right now, we have a lot of properties went off the market. And the second thing on this is that it does help the CMI actually go up because there's less inventory on the market. See, this is all a function of supply and demand. Supply leaves the market, automatically the market CMI looks like it's doing better, even though demand really is just as crappy as it was the week or two before, because it kind of still is. Now, we do have examples of where it's just the opposite. For example, I'll give you this is a true story. We have a property for a client that we just put on the market January 2nd. Now, you can't really time the market being earlier in the year than January 2nd because really on the 1st, you shouldn't do that, okay, as an agent or a seller. But on the 2nd, it's a business day. It was a Thursday. We went on the market. By Saturday, we had sold the property. Now, this property was in the $1.2 million range. So we're not talking a everyday run-of-the-mill $400,000, $350,000 home. So $1.2 million sold in less than 2 days at a time where it's still somewhat slow because people aren't in the back normal rhythms of their everyday life. Okay, so that kind of thing does exist. Now, if it's a nice property in a good area and it's priced okay, I mean, this price was not a given away price by any stretch of imagination. This was a very well priced home in terms of from the seller side. On a scale of 1 to 10, we were probably about an 8.5 to 9. So we were priced well for the seller, and yet the buyer, and we had two actually offers. The buyers actually came in and purchased the property. So there are those examples that are happening. That's why you see on the Crawford Market Index right here, you see Scottsdale being up here, I think around that 12% increase at 132. It's a real thing. The market moves in certain areas across these towns. Now let's go back to January 2nd, okay? Let's talk about that right here, because this is interesting, okay? The CMI for all areas and types has managed to claw its way back to 89.6. Now it's above 90, right? Which is just under that balance zone we talked about. However, this is the part we got to let it sink in for a second. However, the underlying trends are still poor for sellers, generally speaking. We just talked about an example where it wasn't for our client. Now, I think we do a great job, and I'd like to pat myself on the back in terms of our marketing and our exposure and our niches that we expose and advertise to, but overall, still fairly poor for sellers. The main reason for that slight rise in the CMI from its low point, okay, in early December is the drop in supply. We just talked about that, the 900 homes plus that came off the market, okay, for the holiday season and at the end of the year. The likelihood remains that these homes will be listed as active again soon. It would be have been more positive if demand had increased, but it has not. Okay. The Cromford Market Index is down from 77 to 76 over the same month. Not down much, but still going in the wrong direction for sellers to be happy. Again, talking about demand specifically, not supply. Another discouraging sign for sellers is that the contract ratio for all areas and types has dropped to 27.5. What does that mean? It's definitely a cold market zone and is the lowest reading for the start of the month since March of 2009. The contract ratio shows the distance between homes under contract and homes available to buy. Okay, that's what it measures. Homes under contract and homes available to purchase. It is telling us that we still have too many listings for the current level of demand. For sellers to do well, we need either more demand, less supply, or ideally both. Home prices have been remarkably resilient under these circumstances, however, right? That's the good news. In particular, the average price per square foot has been quite buoyant. This is due to the relative health in the high-end luxury market. We just talked about that, a real-life example. Multimillionaires have been prospering because of unusually high returns from the stock market where price to earnings ratios are extremely high levels. Investors in cryptocurrencies have reason to be cheerful too. But here's the word: ordinary folk, not so much. Pricing for the bulk of the market is flat as measured by the monthly median sales price. We stand at $450,000 currently today, which is where we were in August of 2022, and still below the peak of 475 reached during the second quarter of 2022. Guys, so check it out. You want to go back in time? We talked about this a couple episodes ago, but you want that time machine? I just gave it to you. Cromford Market just gave it to you. The market in general in Phoenix just gave it to you. You can go back in time. If you said, I wish I would have bought in 2022. I missed a little bit of the boat. Now I'm going to wait for affordability to come down. You are granted a beautiful gift today by hearing those words, because we are at the same price as we were in 2022. But wait, hold on. It gets better. But wait, there's more. Check this out. This is the Central Valley median quarterly sales price graph, okay? But that's not what I want to show you. What I'm going to show you is the interpretation of it right here. Again, this analysis of just a median price point, right, where you show it going up, up, up for the most part, okay, ignores inflation and concession, okay? Inflation and seller concessions. Number one, the purchasing power of the US dollar has diminished significantly since 22 to 24 due to inflation. So the 427.5 we measure in quarter four of 2024 is worth the same as $396,000 in quarter two of 2022. I'm going to repeat that, guys. 427.5, which is what that number is right up here in this graph right here. See that median price point is the same due to inflation as $396,000 2 years ago. Number two, seller concessions to the buyer have increased between 22 and 24. The percentage of sales that included concessions, okay, when a seller gives credits to the buyer, from 12% in 22 to 53% in 24. The median value of the concessions has also increased from $3,500 when a seller gave concessions to a buyer to a whopping $10,000, guys, allowing for inflation and concessions, which you have to do. That's real life, right? It's where we are today in this American economy. Today's median home sale price in the Central Valley, which includes New River, Desert Ridge, Anthem, Ahwatukee, most of Phoenix, okay, is about 13% lower than the median home price in 2022. Therefore, the median Central Valley home has become cheaper by a slightly larger percentage than the median home across Maricopa County as a whole, which is also down 12%. Guys, down 13%. I want everyone to grasp that for a second. I understand the budget may be tight. I understand it seems like everything is expensive, because it is. But guys, if you do, now if you don't want to buy a house, totally get it. If you're good where you're at, or you don't want to buy, you want to rent for a while, that's because of your circumstances, what's going on, totally get it. Buying a home is not for everybody all the time. But man, I don't believe there is a better game-changing mechanism you can do to change your financial trajectory long-term than owning real estate. And if you have the ability to jump in and get where the prices were at 2 years ago, 12 would be really nice, not 12, 2 years ago, then this is it. Now, it could get worse, right? And therefore, the market could get worse, and therefore, affordability gets better. That's always possible. And that's what people are banking on, I think. But guys, I'm here to tell you that my crystal ball which I have right here, that's invisible, but who knows, tells me, based upon all these smart people, way smarter than me, that I follow significantly and all the time consistently, that the market is not going to go down and it's not going to get better for affordability in 2025. Now, rates could come down probably in the low sixes somewhere. It's not going to be four, okay? And prices, most likely, according to all the smart money entities, Goldman Sachs, Bank of America, Fannie Mae, MBA, are all predicting prices to go up anywhere from 1 to 7% by the end of 2025. They all could be wrong. They all could be wrong. But what if they're not? Then I don't want you to be sitting here at the end of 2025 saying, man, I wish I would have gotten in at the beginning of 2024 when it was equal to 2022 prices again. So just my tidbit, my rant right there for you. And we're going to jump back into a few more things because I won't keep ranting on that same thing, I promise. Okay. Now let's go over here and look at a few more things. Accepted contracts to further bolster the argument of where we stand right now. Accepted contracts versus back on the market in Maricopa. So the orange is back on the market. Look, all these homes come out the market. Boom. Okay. They're going out the market, expiring at the end of the year, but they'll probably be back on the market in January. I bet you this curtails and goes the opposite direction here in a couple weeks. But the blue are the accepted contracts. Guys, look at this. Look at everyone from December 8th. Look at that. Through December 29th, it is a big fat drop. Everyone's taking some time off, apparently, right? From buying real estate in the holidays. Pretty common, pretty typical. But when people zig, maybe you should zag. Just saying. I don't know. Okay. Now, a couple more things here. You have new listings by calendar month to show the seasonality trends of Phoenix. Here you go, right? We have less listings in December because of the holidays, but look at this. So if you think the market could get a little bit worse before it gets better, you might be right because we're going to have probably a lot of those homes that just expired come back on the market in January and more of people who weren't even thinking of putting their house in the market during the holiday season because they wanted to wait until January no matter what. So here you go, guys. It's going to get, there's going to have be more in the market. And so if you want to time this up perfect, maybe it's mid-January. Maybe it's end of January. Maybe it's not. Maybe it doesn't even happen that long. And before you know it, we're going the opposite direction here in a week or two. But it could possibly be a little bit slower here in January before it gets more robust in February and March, April, May, June. So you can see a lot more properties will come on the market typically in January. That's the seasonal trend. And here is a seasonal trend for closings, i.e. demand, buyer demand, okay? You can see right now in December, 153 for seasonal trends for closing. That's a lot, 153,000, right? But not a lot compared to the high months we just talked about. But look at January. A lot of people not doing a whole lot in December for buying and writing contracts. January slower. But then look at February. People start doing things in January and February closings because it's a lagging indicator. And then it jumps up because February, demand really typically kicks in a good amount. And then look at the closings, that lagging indicator for an average 30-day escrow period. Look what happens in March. Boom. Then April, May, June, and then July. And then, of course, it starts going back down a little bit towards the fall. Okay. So there you have it for our seasonality trends in the Phoenix area market. Now, let's talk about some development. Okay. What's going on in Arizona? Because obviously, these two are connected, guys. You can't have a good real estate market without a good local economy and vice versa, bad one, bad economy. So to further believe, if you think the market will continue at its somewhat pace where it's at least stay flat, if not maybe have 1 or 2 percentage points of appreciation by the end of 2025, you would think you could look at the unemployment rate and the local economy and what's coming down the pike. That's what we're going to do, okay? Because that's what we should do. All right, and here you go. Phoenix Business Journal. Arizona ASU scored chips for American flagship semiconductor facility. We are one of 3 cities now that the federal officials announced across America for the CHIPS Act to receive all that funding for the national semiconductor industry. Okay, so now you have this big, huge facility off the Arizona State Research Park that is going to be occupied by companies that will be running with the CHIPS Act funding to further along the semiconductor industry. Guys, you can tell, I mean, with TSMC and Intel, now ASU to collaborate with the research and development of this, holy cow, there's a CHIPS R&D project, and it's going to be pretty big. So again, more and more jobs, but check this out. Since 2020, the semiconductor industry leaders have announced more than 40 expansions in Arizona, representing 16,000 new jobs and $102 billion in investments, guys. That is something not to ignore. And I would argue those 16,000 new jobs, most of them are probably high paying jobs, which will fuel the price point of residential housing to stay where it is, if not maybe increase a little bit more. That will only help that, or I guess make it go up. Because some of you guys might be going, man, that's not what we want. We want to go down so I can buy a house. I get it, but it probably won't happen because of the local economy. This is just one example of many different sectors that are flourishing in the Phoenix area. Let's go on to this one. Arizona also ranks number 6 in growth, according to U-Haul, guys. Population drives a good housing market as well, or vice versa. If people are all leaving the state, you may have some not so good residential housing months or years. But let's check out what's going on. We're number 6 behind South Carolina, Texas, North Carolina, Florida, and Tennessee, all southern Sun Belt states, except for Arizona being in the Southwest. I guess you can call it the Sun Belt, but not traditionally speaking. Okay. Now, what's interesting is the state has nearly 7.6 million residents, is up 6% since the year 2020 and 1.5% year over year. One of the fastest growing states. Okay. Number 6. Now, where is most of that population coming from? Well, I'll tell you right now, significant stagnant states such as California, which ranked 50th, like last place. There's 50 states in America, guys. Last place have helped in Arizona's growth. Check this out. Arizona gained an average of 173 Californians alone per day for a decade, with more than 630,000 people moving to from the Golden State to Arizona in the past 10 years. It is the second most popular U.S. destination for outgoing Californians after Texas, according to new migration trends report from Storage Cafe. But you want to know the worst performers? Here you go. The worst performers are Pennsylvania, number 46, New York, 47, New Jersey, 48, and Massachusetts, 49, with, again, California being number 50, guys, of people leaving the state with the biggest lack of growth in their state population. Arizona is number 6. And so, guys, that is poised to continue to have our local economy do well with the jobs that are being created matched up with the population that continues to pour into the Phoenix area. So this is good for the short term and the long term both. Okay. Census. Arizona's population can keep swelling. Just another report to show that. But you got right here. Let's see. Arizona remains one of the fastest growing states in the country. Yep. And Arizona's population growth from 23 to 24 ranks number 8 for numbers and raw numbers. Okay. And number 10 for percentage growth. Okay. Just another Census Bureau report that demonstrates that Arizona is a great place for people to go to, and they are growing like crazy. Here's the next hot spot. Okay. For second home buyers in Arizona. Now, we all know about the Scottsdales, and we all know about the Paradise Valleys and Fountain Hills, and even just Phoenix in general, right? But this spot is not actually in the Valley of the Sun, Greater Phoenix MSA area, okay? This is outside that. Where's that spot? That's a beautiful picture, by the way. It is none other than Lake Havasu City, okay? And, of course, it borders I believe, the Colorado River. Yep, Colorado River along the border of California and Arizona. But it's in Arizona, so you have all the benefits of being in the state of Arizona, like the lower taxes and so on and so forth. But Lake Havasu City, guys, does get hot. So notice how this is a hot spot for second home buyers, because I would argue probably a lot of them that have the money and the means to do so probably get out of there in June through August, September, because they go to Midwest or East Coast where it's a little more cooler, right? But this is a place that is very up and coming. Kingman is also another place that's up and coming. That's not in this article, but these places up in the northeast area of Arizona, right up here, northwest, area of Arizona, are really nice spots that border up in Nevada and the California area. Okay, so keep that in mind as well. And guys, if you want to go up there and explore that area, we have great real estate partners up in the area that we'd be happy to put you in touch with as well. Hit us up 480-660-5974. Now let's keep it moving, and we're almost done with this party. Here we go. If you were going to come to Arizona and you're going to get a job, this is something you may want to know about, okay? Or maybe you're going to start a business. This is something that you definitely want to know about. But Arizona's new minimum wage will double the federal rate in 2025. What is that number? You are at $14.70 an hour as of January 1st of 2025. It's a 35-cent increase from $14.35, and the reason being is directly tied to the 2.5% increase in inflation from August 23 to August of 24. Okay, now the federal minimum wage is $7.25, which has been in place since 2009. So Arizona is up there for that. Whatever you think about that is, we won't get into the politics of that, or we won't get into the, is it right or wrong? But that's what it is, and so it's probably not going to ever go down, and so that's what it is. And hopefully inflation comes down, but maybe that stays the same, and that'd be great for everybody, right? So hopefully we can get inflation under control regardless. That's the point. But just so you know, that is the number in Arizona, 1470 an hour. Okay, 2 more articles and we're done, guys. PRI predictions for 2025's real estate market. Here they are. We'll go through them really quick. This is the commercial market, which, by the way, is very much so tied to the residential market in many different ways. But prediction number 1, Trump's policies will impact commercial real estate decision making. Okay, they're saying that it will, the tariffs and hopefully bring down inflation, or some people say that will be more inflationary. Either way, it's going to have an impact. So they're trying to see the tax policy and deregulations, how that will work. Then you have the number 2, office will see some green shoots, but they won't erase most pressing challenges facing the market, like loans that are resetting, right, and to go up. That's not good, right? So with the interest rates where they are, we got to figure that one out. Number 3, housing will face the same challenges it had since the pandemic. Yes, we all know that. And primarily, there's the 2 words: housing, affordability. That's the big thing across America, not just Arizona. Number 4, data centers will continue to be a source of growth and contention. We have a lot of data centers in Arizona, guys. As a matter of fact, they might mention this article, but man, they are popping up everywhere in Arizona because we are providing a ton of industrial commercial space that is ready to go for cheaper costs too than most on the coast. Prediction 5, it is the time of resetting and rebalancing for many commercial real estate sectors. In particular, multifamily and industrial real estate saw record demand and pricing in the early years of the pandemic. And now there's a glut of inventory, so they may have to reset some expectations with those commercial real estate sectors. All right, guys, and almost last but not least, before we get to this, that's a cool one right here. But where's the 30-year fixed? Right now, it is at 7.10. It is still above 7%. I know. And it probably is not going to come down anytime soon because we need to know where the market's going to go here in the future. And the the bond market, the smart money, if you will, they're not buying the fact that inflation is under control. And so even though the Fed dropped their federal funds rate, the bond market went in the opposite direction. And so therefore, so did the 30-year fixed mortgage rates. And they have stayed there ever since the announcement of the 25 basis point cut in December by the Fed. Okay. How much did ASU, Big 12, earn from college football playoffs? Now we're talking ASU because ASU is in the Big 12, and ASU is right here in Phoenix, Arizona, in the beautiful suburb of Tempe. And they, as you know or may not know, they made the college football playoff, the first 12-team college football playoff ever in the history of college football, and it was exciting. Matter of fact, there's the Fiesta Bowl, which is Penn State and Boise State. I actually went to the game, took my 2 sons. It was awesome because I'm a big football fan. If you have a chance to go to the Fiesta Bowl, you definitely should do that. It is a great experience, especially if you have boys or just maybe grandparents or whatever that love football. It's just a great experience. And Penn State won that game. They're moving on. But Arizona State had a great showing versus Texas. And this talks about the payouts. If you're curious, real quick, the top runners: Texas, Notre Dame, Ohio State, Penn State, all at $14 million, $8 million, and $4 million, with the Big Ten, the biggest earner by conference, at $40 million, SEC at $26 million, and then so on and so forth as it goes down. So there's a lot of money in sports, as we all know, especially college sports nowadays. And that was kind of interesting to see what ASU, going back to ASU, $8 million right there. So congratulations to ASU. Hopefully that will help fill the coffers of the Sun Angel Collective to have more NIL money to get the best players they possibly can, so they can put the best product on the field, and we all can be proud of our hometown university, right? And by the way, Coach Kenny Dillingham, shout out to you. You're a good friend of mine and a client. Hope you guys enjoy your new house, and you and your beautiful wife, Bree. And just thank you so much for the support as well on the real estate side. And I support you guys and what you're doing at ASU. You've done a phenomenal turnaround job for Arizona State football, and I commend you guys for doing that. And thank you for being a good friend, Kenny, as well, over the past decade plus for me personally. So been awesome to see all the way around. Love it. And guys, if you have any other questions about real estate, feel free to give me a call, 480-660-5974. We'd be happy to help you out in any way possible. Until next Monday, keep it right here locked on Everything Phoenix, the live edition, Mondays at 12:30 while you're eating your lunch, local time. Take care, guys. Well, actually, keep it classy, Phoenix.